it started with this manufacturing report out of China the other day, and the market started to sell off at that point. Is that really what this has been about this week? Just the fears about the growth rate in China?
Well, no, I think it started at the beginning of the year when we saw a lot of the emerging market currencies decline due to the fact that the Fed started to taper. So what we had was a two-pronged approach where we have the Fed withdrawing some stimulus that takes money away from EM, as well as the fact that China PMI slowed. And if you look at who the top trading partners are of Argentina and some of the countries that are having the biggest currency fights on their hands right now, the top three is basically China, the United States, Japan, or Germany, depending on which emerging market you're looking at. So that's a double-pronged assault on those emerging markets. We saw a lot of VIX buying. I don't think people are selling stocks. What they're doing is they're hedging in the VIX. The VIX went up to 17, as well as selling the futures in the E-minis. So we used that 1835 as a pivot pre-Martin Luther King Day. That seemed to work well, as well as the fact that the yen obviously strengthened, and those two were, the correlation there was very high. So we think that right now this is playing out just as expected.
John Rutledge, explain, to people what this is really all about then. I mean, what has been the catalyst for the sell-off?
Well, people have an itchy trigger finger at the moment. And to paraphrase Yogi Berra, if investors want to be pessimistic, nobody's going to stop them. So I think this is mainly sentiment-driven. But to echo what my colleague is saying, there's a huge carry trade element to this. The Fed and other central banks have been forcing developed country interest rates down to zero for a long time, which means investors borrowed money in these currencies to invest in the emerging markets to capture the spread. As the Fed pulls out of tapering and people start figuring out there's still a lot of reserves out there, the U.S. rates are going to go up. Europe's growing. Japan's growing now, which means people are shutting down these carry trade positions. So you see big drops in emerging stock markets and in currencies and also in the commodities that depend on them. I think the reduction in the China manufacturing report was really minuscule. Actually, the level of manufacturing activity in the report is still growing. It's the outlook that's now a little bit below 50. So I think it's mainly a financial issue, not a fundamental growth issue.